Welcome back. This is Corporate Radar on CNBC TV 18. Well, Allcargo Logistics was under pressure yesterday on the back of a weak Q3 performance. Their revenues have shrunk this time. Margins have contracted. Ravi Jakhar, who is the Chief Strategy Officer at Allcargo Logistics, joins us now to talk about that. Mr. Jakhar, thanks a lot for joining in. I want to first start by asking you about the situation in Q4, because in Q3, your revenues were under a lot of pressure. How is the situation in Q4? What is the kind of volumes and realizations that you're expecting to see? And is there more pressure in store?
So thanks. It's a pleasure being on your show. As you would notice, over the previous few quarters, given the global trade environment, our performance has been seeing decline on the revenue and bottom line. However, we had mentioned last quarter that this is now bottoming out. And if you observe the performance sequentially quarter on quarter in the international supply chain business, it's been more or less a flat quarter. EBITDA perhaps has gone up about 8-9% compared to the previous quarter. So we believe that this has been a bottoming out. The global trade environment has come to a subdued range, and we do not see immediate uptick in the quarter four. And we maintain that we expect trade revival to happen in the second half of the year, because we are seeing that inflationary pressure is easing across Western Europe and other parts of the world. So on the back of interest rate cuts expected in the coming months, we expect consumer demand to revive, and that should lead to improved global trade in the second half of the year. Having said that, we also have been speaking about various cost initiatives on our side on the back of digitization, offshoring, and that has led to some good benefits, which would start to show up from the quarter of April itself. The quarter ending March would see some amount of savings, as these cost reductions come with some degree of termination notices. We would also see a bit of severance cost, which will be a one-off cost. But the outcome of this would be a leaner, more efficient organization, which would be able to grow on the back of contained costs. So that should be visible from the quarter of April. And we expect the trade revival to happen in the second half of the year. But like I said, if you look sequentially, the decline has been arrested, and now it's been rather marginally up on the international supply chain business compared to previous quarter.
So can you put some numbers to that? You're sitting on a base of around 3,200 crores in terms of revenues. What do you expect in Q4, and what is the kind of minimum growth that you can do in FY25?
So I would say that Q4 is not likely to be much different structurally, because the global trade environment remains quite similar. In terms of profits, like I said, FY25 onwards, which is from April onwards, we should see sequential improvement quarter on quarter. I would not put a specific number to it, but I would say Q1 FY25, given the cost initiatives and revival in the trade demand to follow, should be better than the current quarter, and then it should be sequentially improving. That's what our expectation is.
Hi, Ravi. Good morning. Good to see you. When you said that there could be some severance cost in quarter four, could you quantify it?
I wouldn't put an exact number to it, but like I said, whenever we look at certain cost reduction on the personnel side in some of the geographies, that comes with one-off severance costs as well as we settle the amounts. But there will be a one-off amount which could be there, but the outcome would be a sustained cost reduction on the back of a more leaner organization. That's how I would put it. Okay. We'll share exact numbers when we have them here.
All right, Ravi, you also announced that scheme, right? I mean, we have been chatting for the last couple of years or so, and you recently announced that scheme. By when does it, totally take place? By when does it get completed? Point number one. And there'll be some synergy benefits as well. So have you quantified that?
Yeah, so indeed, like you said, we've been talking about it for the last couple of years, and this is like the final step in restructuring now. As you know, the scheme has been approved by the board in the month of December. It's currently with the exchanges. We believe that by the end of this year, January 25, December 24, that's the broad timeline in which we expect the scheme to go through. As you know, the international supply chain would become an independent company. And the biggest advantage would come on the side of contract and express logistics, which is currently in different step-down subsidies, and that comes along. Contract logistics and express logistics both cater to the same customer segment, which is ideally looking for fulfillment logistics. So therefore, we would be in a position to provide more integrated solutions of warehousing and express distribution. And therefore, there should be two kinds of synergies there. One, on the customer side, we believe there should be an opportunity to enhance revenue, as we could gain higher market share within the customers. So share of wallet should increase with some of the customers. And second, naturally, on the organization structure itself, as two businesses which are so synergized and congruent come together, we should be able to rationalize on the org structure as well. So that would allow us to have synergies on the cost side as well as synergies on the revenue side.
Got it. For Gati, I wanted to understand the way forward, right? You have an aspiration to hit 3,000 crores of revenues by FY26. Are you on track to do that? And, what is the growth trajectory that we can expect up until then?
So there are, 2 or 3 key components to Gati's growth strategy. First is operating strategy, where we want to continue to invest in infrastructure and improve the operations. That part has largely been done. I would say we are currently much improved than what we were a year ago as a service provider and amongst the best in the industry today. The operating measures are all matrices are in the range of 90% or above. So operationally, we have expanded the hub capacity, which is now good enough to take care of future growth as well. So operationally, everything is going well. On the commercial side, we anticipate revenue growth on the back of volume expansion. Now, if you see over the last few quarters, we have seen expansion in volume. But perhaps the first piece of revenue coming in is more from the larger accounts, and therefore the yield mix has changed a bit, which has led to revenue being more flat while the volumes have expanded. Going forward, we believe that the mix should improve, and that should lead to increased revenues as well on the back of continuing to increase volumes. So commercially, things look okay on the volumes and should improve on the revenue side. And with operations being more streamlined, we have already invested in people. You would be aware we have also added a little bit more competence on the management side with some key executives joining the board as well, and joining the company as well, which should help us allow faster expedited commercial growth. So on the operation side, things in place. Commercially, things should improve over the next coming quarters, and therefore I would say we are on track on the plans. There could be a delay of a couple of quarters here or there from the original plans. In terms of the revenue guidance shared by the management team, it is driven by a combination of things, and the Gati management team would share more details on that.
All right. Just one word on fundraising as well. You have a board now to raise 500 crores via either the equity or warrant issue. Any kind of timeline that you're looking at for fundraising at Gati?
We are evaluating options. The idea is, the companies have a little bit of leverage. I mean, as you know, Allcargo for the quarter reported ending December, we only have a net debt of about 200 crores. But as a group, we believe it will be good, particularly in the domestic business, to not have any leverage and have better, reserves for supporting growth. So we are evaluating options right now. No specific timelines that I would like to comment on at this point in time.
Okay, all right. Ravi, always good speaking to you. Thanks so much for joining in and giving us details with regard to how you see business shaping up. In the last couple of times you said, second half of the year, you hope that things will revive and things are bottoming out. So we'll hold you to that particular comment as well and wish you all the best. Well, with regard to the markets,